What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 20th of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are. And today we're going to be talking about the dichotomy in tones between cryptocurrency markets and equity markets, predominantly U.S. stocks. As we've seen recently in most major indices, we've been seeing a similar pattern of topping out on most of the major indices, from the NASDAQ to the Dow Jones and to the S&P 500. And this is causing a lot of fear that we might start to see a serious pullback over the next few weeks and months. An exit of a lot of liquidity or money out of these markets. Well, where could it possibly be going to? Well, there is one sector that has been doing well this year, in a year where pretty much every asset has been down, and that is cryptocurrencies. So we're going to be talking about the short term of Bitcoin and cryptocurrencies, and also what to watch in equities in order to see if maybe this could be the catalyst that carries crypto forward. So let's go ahead and dive into things, guys. So we've already talked about in the previous video back a few days ago when we were down in this price range at 7,300. Yesterday we had a really big pop up out of nowhere. Not as substantial a volume as we'd seen before, but nonetheless the price made it there. So as we've been in this kind of range here, we've been talking about how we do expect Bitcoin to come down to the 6,000 to 5,000. I'd say much more reasonable, around 5,500 range, possibly on this green line that we've seen. It's held support for a little while. The reason I do see this happening, guys, is because there is a few different things at play here. The RSI is pretty dramatically overextended. We had two different periods, as you can see here on the chart, where the RSI was reaching an 88-point range on the daily. That's not very healthy to see, especially seeing as if we take a look at indicators like NVT, things that actually kind of value Bitcoin as a network, or see how overvalued or undervalued Bitcoin is, depending on the network volume that it's network traffic that it's basically surfacing. We can see that it's obviously right now, it's technically and fundamentally overbought. The price has gone pretty much parabolic, and I think this whole double top here that we're seeing kind of plays into that. Doesn't mean that I don't think Bitcoin is set for some higher levels going into the rest of this year. This monster rally has definitely changed my tone on Bitcoin, guys. And as I'm going to kind of dive into here over the next few minutes, as much as I do believe in the short term we're going to have a pretty sharp correction closing down a good chunk of these gains, getting the RSI back down here to an oversold range and something that would be much more technically favorable, I do believe that there is good reason why Bitcoin is moving the way it is. I do believe that it will continue to possibly move higher over the next 2 to 3 months here. We could substantially see Bitcoin go up to 10K. And the reason I stand by that is because of what's going on in traditional markets. So there's a funny article I just want to kind of dive into here, and I think it kind of plays into it. The European Central Bank does not consider crypto as a threat, okay? And they see a future in stablecoins. This is actually really funny. So I actually like stablecoins personally. I think they're going to be necessary for the transitional phase before we can really use crypto as currency. To be fair, guys, let's just be real for a second. As much as I love crypto as a future store of value, as a investment vehicle, and I do want to see crypto being used as currency, it's too volatile right now for me to give you Bitcoin for something, and in 6 weeks' time, you're going to have a valuation of that Bitcoin being something completely different. I can tell you, while most businesses, even that work in crypto, don't hold their crypto, right? So it's very important to kind of keep this in mind. But the European Central Bank, what's really funny is they don't consider crypto as a threat, but it is going to be a major threat in the sense of stripping value from traditional markets, right? This is something that they haven't considered yet. The fact that it could strip a lot of liquidity and valuation from equity markets, from property markets, to something that doesn't have a tie to national origin. That's very, very important, guys. Something that is I think we had basically Anthony Pompliano on CNBC, who's doing an interview or a piece with Kevin O'Leary and the team over at CNBC, and I actually liked his presentation there. It's a non-correlated asset. It's not correlated to anything. It is actually, more than anything, the perfect hedging asset that we've seen. And as we can see here, futures markets, from the NASDAQ to the S&P 500 to the Dow Jones to the Russell 2000, all practically down, 0.5 to 1.5% here. So the market is looking to open down. Actually, I think we just opened up here, so we can take a look at the NASDAQ at the current price action. And I can tell you all, this chart is not looking good here. So there's a few different things we need to talk about. The first thing is that this was pretty clear. We talked about this. If you guys remember, you can go back in my daily updates. We focused in on this ascending wedge here, which is obviously a bearish, basically a bearish pattern. Descending wedges where you have lowering lows and lowering highs and coiling at a price usually leads to a breakout. In this case, where you have hiring lows and hiring highs and it gets more and more narrow, you tend to have a breakdown. And we got that. Now, people would say, oh, this has to do with the trade war. This has to do with all of the kind of surface level things that the media is throwing at you. But I got to be fair with you all. I really don't believe this is the case. What I do believe is happening here is that the market is finally reacting, and obviously maybe in combination with the trade war and a variety of other macro factors, it's reacting to the fact that the Federal Reserve did not cut rates when markets reached back up to similar highs, and it didn't provide any kind of word on possibly producing some next layer of quantitative easing, which is basically where they inject capital into financial markets, buying up financial assets. And as we talked about, we actually talked about this in my newsletter recently, how basically the Fed at this point, with how high equity markets are, they are going to have to take Japan's style of ETF buying, basically buying up ETFs and stocks off of the actual equity market in their own nation. They're going to have to go ahead and start buying up basically SPI, so the SPY ETF or the QQQ. These are the ETFs that you can trade on some of the major indices. They're going to have to start buying up Apple shares, a lot of major companies in the United States, if they want to keep the game going. Because right now, the risk to reward favoring for a new investor to come in is not very good. And we can see that it's not many new buyers that are coming in. It's been the stock buybacks that have been keeping up markets. It's been all these really cheap ways of playing the game and keeping equity markets very high. So again, you guys probably know about all of this. I've talked about it before. If you haven't heard me talk about it before, there's a lot of great videos. If you scroll back through my videos, I'll possibly leave some link down below if you guys are interested that talk about just how much they've been able to put into this market to keep it up. But anyways, major point here is that no matter if it's the trade war, no matter if it's monetary policy, technically speaking, if you see the NASDAQ, for example, break below 7,600, or you see the Dow Jones break below 25,000, or if you see the S&P 500 break below 2,800, this is when I'm going to start to see some serious fear in the market. And honestly, guys, who can blame the market? You basically almost have either what would be seen as a double top or close to a triple top here in the S&P 500. The Dow Jones, a clear triple top around the 26,500 point range, and the NASDAQ as well, which has been leading the market, double topping yet again, right when we made new highs, actually printed technical new highs. It's right around the same range, guys. It's right around 8,100. So again, it makes complete sense here. It was screamingly obvious as you had this ascending wedge here in the market. Now, why does this play into Bitcoin? Why am I rambling on about this like a crazy old man? Well, the reason why is because I can't believe I'm using CNBC as an article, kind of surface to talk about this, but it is very true. We could possibly see, because of Fidelity, because of all these new entries for institutional investing into cryptocurrencies, that maybe, just maybe, we could see Bitcoin finally start to truly serve as a hedge for institutions in financial markets. Okay. Now, I don't think it's going to happen overnight, and I think that there is a little bit of overhype in regards to the Fidelity and Fidelity brokerage services for trading cryptocurrencies in this case. I'll go ahead and get the reason why I think there's a little bit of hype. The first point that we need to make clear is that, as I talked about a week ago, this is not going to be open to everyone. Okay, it's very important to understand. It is not going to be open up to all institutional clients right away. They have a select few partners with the company that they're going to allow to trade it first. Now, these are, I would assume, some probably affluent, high-up clients, in this case, if they're being really picky about it. But over time, this will allow more and more as they open it up to other users to get access to these services. So we need to keep that in check, right? And as I mentioned, guys, I can ramble on about it for weeks. I really think this is what's keeping down markets. So long as interest rates keep rising, and along with that, you see all major central banks really starting to cut. The European Central Bank, the Federal Reserve, the People's Bank of China cutting assets down in about a year and a half's time of 500 billion. The Bank of Japan starting to flatline at the top. And again, just the whole cross of the board here, we're not seeing quantitative easing, we're seeing quantitative tightening. There is a liquidation of assets here, right? There is the central bank is a net seller now, or the central banks of the world. And as interest rates rise, capital gets more expensive. So you have two major pressures being applied, and not to mention, now you've got this talk of a trade war and everything. It would make sense that you could see, again, a non-correlated asset that has a finite monetary supply getting some price action like this, right? It's not too confusing. Now, again, as I've talked about, in the short term, I do see us coming back down to this range, at least in the low 6,000s. That's where I've got a decent amount of my buy orders set. I've got some limit orders set across exchanges, and that's what I'm going to be adding on my positions because I do believe this is overextended in the short term. That being realized, I do believe as we step towards the halvening, as we have this kind of perfect storm of events across the world stage, that we could very well see price come down to this range, again, continuing to test support at 6,000, and eventually starting to move higher past that and going up towards 9,000, 10,000, 15,000, 20,000. It's going to take some time throughout 2019 and 2020, but as we go into 2020 and 2021, I'm very confident we could see some amazing movements in this market. I have no doubt because, guys, Bitcoin itself, with all the news it had back here with the Bitfinex debacle, with Tether, and all these fearful stories that came out, the Binance hack, none of this could hold back Bitcoin because it doesn't change the fact that Bitcoin is still working. Bitcoin has not broken its functionality. It is working as intended. It is still limited at 21 million coins. There are more than 21 millionaires in the world. Each millionaire in the world could own a Bitcoin if they wanted. So if Bitcoin is going to still, go off of this assumption that it could potentially be the next store of value in the world with all the properties that it has, these are going to be very exciting times. So even though, for example, I have my buy orders down here around I think it's 6,250 or like 6,500, somewhere around there. That's at least where I'm getting my first entries in. If this comes down and it starts to pick back up, don't get too greedy, guys. Don't get too greedy wanting it to go down to a certain price range. And please, for the love of God, don't think this is probably going to 2,000 or anything like that, guys. I hope at this point you guys realize it's probably not going to go there. I mean, I could be wrong. There's very much a chance Bitcoin's done this, so it can do pretty much anything. But I don't really see that happening. So, above all, guys, I've rambled today. As always, I like to do a little bit of rambling from time to time. I think it's necessary when you're diving through a lot of information. But I'd like to know what you all think about this. Are you guys long equities? Do you think I'm completely wrong on it? And also, are you guys, still betting crypto is going to carry on with this parabolic price action, or do you believe we could have the short-term correction? And what do you think about the long-term as well? Guys, I love when you guys can leave those serious, solid paragraph responses because I do read them. I try to check out the comments when I can and give you guys a reply and let you know what I'm thinking as well. So feel free to put it down below. And if you guys like the video, please give it a thumbs up, as well as supporting us on Brave. If you guys use the Brave browser, I always appreciate it. It helps support the channel. And it's another kind of income stream that can help us do this more full time. So anyways, outside of that, guys, that's it for the video. Thank you all so much for watching. I hope you all are having a fantastic start to your week wherever you are. But until the next video, I'll see you all in the next one. Stay tuned.